Hi folks, it's Björn here, and in today's video I will explain what is happening right now and what could happen with the stock market over the next few months. First, we will have a look at the S&P 500 and why it matters. Then at the new coronavirus mutation and why I believe that it won't or shouldn't have a great impact. Followed by why I think the tax loss harvesting is over and what I will do the next month. The market struggled yesterday around 4,651 resistance. However, we saw that the S&P 500 went south. It broke the 4,600 support and then it went much lower. In a worst case scenario, we could see a break below 4,500, in which case we could see 4,300, 4,000 or even 3,800 support materialize before the correction comes to an end. Why is that important? Well, let's have a look at the two biggest, Apple and Microsoft. Now, Microsoft accounts for about 6.35% of the index's weight. Microsoft trades at about 36 PE ratio. This valuation is highly stretched. Microsoft was typically an between 8 and 12 PE ratio company for most of the last 2 decades. Then it was 15 and now it's 37 suddenly. Moreover, its price to sales valuation was about 2 to 3 and now Microsoft is at 14. This type of PS valuation is something you may expect to see on a high risk, high rewarded small cap growth stock. But Microsoft? Now let's have a look at Apple, the second largest component of the S&P 500 at about 6.32% weight. Apple is trading at over 7 times sales, also around its highest level in the last 2 decades. Moreover, Apple is approaching a 30 PE multiple, which is remarkably high if you compare Apple to others. And for all Apple holders, the latest news are that Apple is facing a big supply chain issue and had to cut 10 million units of the iPhone 13. But let's continue. The S&P 500 is dominated by mega high cap tech. The index top 7 holdings are all mega cap tech stocks that account for around 28% of the index total weight. Alarmingly, these companies and many others are trading at abnormally high valuations that could get repriced at any moment. Let's have a look at the VIX, the VIX, which is known as Wall Street's fear gauge and has spent much of 2021 in the range between 15 to 20 compared with its lifetime average around 19.5. As markets have calmed down from the last year's pandemic-induced turmoil, spikes early in the first quarter and took the index about 30 several times. But since then it hasn't broken past 29 on an intraday basis. But I believe it could go higher as Jerome Powell probably will speed up the bond buying taper, and the Fed taper coupled with the anticipated higher interest rate environment should continue to pressure economic growth from now on. If the world's most significant economy are showing difficulty expanding now, tighter monetary policy will not able to growth to accelerate. Now, whether the Fed chooses to raise rates aggressively remains to be seen. However, the critical factor right now is that the market expects the Fed to act soon. Unfortunately, it does not appear that the stock market has priced the Fed's plans, and stocks are at risk of being repriced substantially lower here. And let's talk about Omicron and why I believe it will not result in a crash. Even if the first US case of the Omicron variant of COVID-19 has been confirmed in California. Omicron sounds horrible, but it isn't. The mutations become their name from the Greek alphabet. That is all. But here's some facts. The significant number of the mutations could make the Omicron variant more likely to reinfect people. Additionally, mutations in the strain could cause the virus to be even more transmissible than the highly contagious Delta variant. Perhaps most concerning is that due to the numerous modifications to the binding spike protein, Omicron could be resistant to current coronavirus vaccines. However, the Omicron is just beginning to spread outside of Africa, yet Things are already getting a lot worse in many countries around the world. For instance, Germany has seen its coronavirus cases skyrocket recently. The highly vaccinated country, which is not really true, I believe, because there you have a lot of people that don't want to get vaccinated, has been registering tens of thousands of new cases each day lately. The number even ran up to around 80,000 new cases in a single day recently, and unfortunately the country is registering hundreds of deaths each day now. Moreover, it's not only Germany. Things are bad in all over Europe. France, the UK, Poland and other European countries are registering some of the highest coronavirus readings since the pandemic start. In fact, things are getting so bad that Germany and other European countries considering instituting more full lockdowns coupled with mandatory vaccines. Germany's neighbor, Austria, already imposed a complete lockdown and mandatory vaccines for its citizens, and other countries will likely follow as we advance. Why is this happening in one of the most heavily vaccinated areas of the world? Well, people are letting their guards down, pockets of the population remain unvaccinated, and many people have declining protection from vaccines they received last fall and winter. It appears that the COVID-19 shot may turn into an annual affair, much like the flu vaccine. However, the problem is that the coronavirus is much more detrimental to economic stability and growth. After all, increased restrictions and more lockdowns should cause European and other economies to slow more substantially. But a crash won't happen, as a crash never happened on old news. Means we had already a coronavirus pandemic, and I am pretty sure we will have an mRNA vaccine for this Omicron pretty soon if needed. As that is an advantage of mRNA vaccines, as you only need to change some building blocks. Anyhow, with all that news and the market going down, there is an opportunity to sell stock at a loss. But what is tax selling? Tax selling refers to a type of sale in which you sell an asset with a capital loss to lower or eliminate the capital gain realized by other investments. For income tax purposes, tax selling allows you to avoid paying capital gains tax on recently sold or appreciated assets. And that's why I believe we have seen as well a sell-off in mid and small caps last month. But I think that should be over soon, as we have a wash sale rule. Means if you sell now shares for the tax, you have to wait 31 days before you can buy again. And most want to start investing before the next rally comes. Jesus, that was a lot of information. And a quick reminder before we come to what could happen and what I will do. If you liked the video so far, please give it a thumbs up, as the algorithm likes the stuff. Many thanks. So, but what would happen to the S&P 500 and other major stock market indices if the big tech names and other frothy market leading companies corrected? Well, we could see a severe market meltdown, and a correction of 20% is not out of the question in my view. To be clear, a 20% correction from the recent top would drag the S&P 500 down to precisely to the 3,800 support level. However, even a milder 15% drop would bring the S&P 500 down to around 4,000, causing massive pain and portfolio damage in the process. After all, a substantial decline in the stock market could wipe out gains that took years to achieve. Worse even, if you are using margin, you are not only at risk of giving up profits, but you could potentially lose your principal investment. But with investing, you always have a choice. For starters, you can choose to mitigate risk, enabling you to decrease your potential losses. You can choose to rotate some capital away from your high gainers and invest in areas that are less vulnerable. Or wait and see what the market is doing and invest step by step with a discount in stocks you have on your watch list but were too expensive to buy until now. And that is what I will do, folks. But let me know in the comments what you think will happen to the stock market the upcoming month and what you will do. That's it for today. Thanks for watching, and as always, if you want to earn interest on your cryptocurrency and you want to receive up to $250, I will pin the link in the comments below. And remember, stay focused and don't get greedy. See you next time.